Ladies and gentlemen, welcome to the, what are we calling this? That's exactly what we're trying to figure out here today. So we're talking all about SoFi and SoFi stock related issues or successes. And this week we actually have a lot of news. There'll be a lot of discussion about SoFi today. But a change in names might also need to occur as well. So you might see a couple different options throughout the next little bit. And we'd love your guys' opinions as well on what we should name it. But Tevis, how are you?
I'm doing well.
Nice.
Had a great, it felt like a Saturday today. It was great. I actually had time to make a video for the first time in like 2 weeks.
Curious what you covered.
Fantastic. Well, I wanted to do a video to almost like prep for what we were going to talk about tonight. So I did that.
Roy, I'm sure you also made a video about this same similar topic.
I did. I hadn't made a SoFi specific video in a little while, so I certainly did. And yeah, it's a good Friday to discuss it.
Now, I said that this was the biggest news that SoFi has ever received. And I've had some people say, come on. But I haven't heard a reply.
I think the acquisitions probably Technisys and Galileo.
The bank charter? Hello?
Maybe. I mean, that they were going for one, yes. Like it was inevitable, I think, that they'd get it, but yeah.
Yeah, I don't think so. I like in acquisition, I find like
how is this even the biggest news, bro? Like they had a bigger like loan platform business deal.
No, I don't think so. No, I
think Tanner's right here. Like this is one of the it's top 5. I'll say top 5 for sure.
It's the second biggest one after Blue Owl.
But top 5 as far as an announcement.
How is this bigger?
Well, they've signed $5.2 billion in the last 2 years.
Okay, it's not one news piece.
Yeah, but it's a recurring customer. So I think that's more important than a single customer.
I've had recurring customers before.
Okay, well, how about we do this?
Blue Owl is not recurring.
How about we do this?
No, it's a bigger
Why don't you guys break down what this is?
It's not about this.
Paying attention, and then we'll discuss why it's so big.
I didn't say that this is the biggest, most important thing. I'm saying this is, or sorry, like it's not about number. It's about importance. This was the most important thing.
Yeah, I wouldn't go quite that far, but it's the most important of these type of announcements, and it's a top 5 most important thing.
Let's get into the news. So what we're arguing about here, which there will be more arguing to come.
Yeah.
SoFi secures a $3.2 billion expansion to the loan platform business across agreements with Fortress and Edge Focus. So this was a $2 billion loan platform agreement with Fortress, which was their second time that they've done this. And then they signed a 2-year agreement for $1.2 billion with a joint venture with Fortress and Edge Focus as well. Okay, so the total commitment provided by Fortress for the SoFi's loan platform business has now reached over $5 billion. Unbelievable. I'm so stoked about this. The last $2 billion deal that was signed with Fortress was in October. That was supposed to be for 12 months. Then they signed another $2 billion, well, actually $3.2 billion in April. Holy.
And another in March too. But yeah, so one of the reasons why it's
with Fortress is not
beyond the monetary amount is the timing. So a lot of macro uncertainty is happening. And one of my questions entering into the earnings call and entering this quarter was, okay, is this going to make some people skittish? Because it's not just about tariffs. It's that a lot of qualified people think a recession is imminent, or at least the likelihood of it is much more likely these days. Goldman Sachs, had intimated that too. And I know that Noto closely aligns there. So the fact that they did this type of deal in the fall, that's great, but things looked pretty great at the time. And now it's like, okay, a lot more uncertainty. So this signifies massive, massive demand. And 1.2 billion of that was through this platform that Edge Focus and Fortress also collaborate on. And I thought that was really interesting. Like it pulled up, and I think, I'll just show this. I covered this in my piece here, but on the same day of this announcement for SoFi, Edge Focus also announced this too, that they closed their inaugural 150 million ABS deal, and then they launched their tech-enabled credit platform into the capital markets. Now, the actual announcement from SoFi and that they jointly did together, it didn't say what that technology platform was that Edge Focus and Fortress are using. It's not Galileo, guys, so don't think that. But they talk about it. Probably this is it right here. And there's two aspects of it as well, Origin and Lens as well. So I thought that beyond giving some clarity as far as what kind of demand that we'd see in this kind of macro environment, it's very high and very rampant. This was an interesting piece where it's like these guys seem like that they have a quality product anyway, and they still want SoFi to back in that, even though they're talking about all these data-driven outcomes and everything. They're like, but still, we want to tap into that SoFi market.
Yeah. No, I think that this is super important for the SoFi story. This is going to be the product, in my opinion, that will make them more money than any other product that they've ever put out. Ever. And they continue to get recurring deals with customers that have massive checkbooks. And that's exciting. So
before we go further, though, do you have a white T-shirt you can change into? Because people are demanding that. So.
Yeah, I'll be right back. You guys talk.
All right, Tevis, you're muted, Tevis. But what do you think about this platform?
I liked it. I think the demand. I'm still stunned that he's going to get a white T-shirt that quickly. Like zero fight in this guy, just completely like, okay. No, I mean, look, I liked it because they basically doubled up in 6 months, and normally you would have an increase in the business and expansion in that partnership maybe after a year, a year or something like that. But to literally double the investment after 6 months is a real testament to the satisfaction that they had with the initial offering. They had enough time, I guess, to take a look at the benefits. The head of asset or credit risk asset management, basically their spokesperson in the PR, said this was mutually beneficial for Fortress. And yeah, so very good. I mean, look, I think, okay, so there's a lot to dig into this one. One post that I made earlier today was this meme around the cat looking over the snowbank. Do you guys know that one? And I was like, this is going to be every other fund on Wall Street, because it makes some ripples, or I would imagine it would make some ripples when you literally have that acceleration in demand to originate almost $12 billion in a year on behalf of others, and then to have them come back for seconds. That every fund out there is going to be asking themselves, all right, like there is money to be made here. Obviously, our peers are validating that there is money to be made here. Let's actually give a little bit more weight to this and see if we can also partner with SoFi. And so I think, SoFi, as they continue to accelerate this, not only is the demand from a macro validated, but I think they're going to have bigger names lining up to do business with them, because the word is going to get around. And like, obviously, if this was unsuccessful for the first companies that were doing it, smaller firms, smaller deals, whatever, then that's the last you would hear of it. But it's successful, and that's a testament as a result of this PR, to Tanner's point. And so I think that it's going to send a strong signal to all the other funds out there that are looking to make money with SoFi through these partnerships.
He's going to go change right now.
You need a black hat, Tevis?
Oh, Tevis is out.
I don't know if I have a black hat, dude.
There's no hat that fits that head.
Too big of a brain.
I don't know if I have a black hat.
What's it called? I saw in your video, Tevis, that you said your big concern about the loan platform business will be able to actually fulfill,
Well,
have supply for that demand.
yeah, maybe we can talk about. Sorry, I'm laughing at the comments. Maybe we can talk about that. It's not a big concern, and it's definitely not a concern that's going to manifest anytime soon. But it's more of a question because I'm not in this space. But I can imagine that 2 years, 3 years, 5 years from now, if we are operating under the assumption that there's a lot of demand from the third party partner perspective, then the only limiting factor is how fast SoFi can find the clientele in those credit boxes to service those loans, right? And or to originate those loans on behalf of others. And that sort of explains, this is getting like progressively more audacious, this podcast. You guys are throwing me off big time. So my point was, Tanner, that it sort of makes sense in that context if they had a plan all along to ramp up the loan platform business in a big way, that they would go back into growth mode and reinvest into the acceleration of their sales and marketing to get more members, to essentially have a larger pool of people to originate off of in these third-party deals. But at the end of the day, let's say SoFi has a super, super tight credit box. They only accept people that are 200 grand and above, that are 800 credit score and above, like a very thin group of people. Even if a third party comes and they still want high FICO score earners, they still want high income earners, but less so than SoFi, then SoFi would expand their credit box to say, okay, we're going to originate personal loans for Fortress now for people that make 150K instead of 200, and people that have 750 FICOs instead of 800, right? Like, so they expanded out a little bit. And so my overall question was, how much can they expand that out, and how big does the pool of possible personal loans that they can originate become? Because at some point, there's not going to be a partner that says, hey, give us all the 600s. Everyone's going to have 700 and above. Everyone's going to want, 130K plus in terms of the incomes. And so they could expand it. But with 12 billion in the first year, if that growth continues, I guess, unaware as to how easy it is to get new people within that same credit box. I would imagine that's a pretty difficult thing to do after a few repetitions of this thing, like extrapolate 3 years out, right?
I don't think it'll be as hard. Go ahead, Roy.
I was going to say that's one of the reasons why the member app acquisition is so important for SoFi. It's not just for SoFi, but it's also for products like this, where they can use a Lantern, or they can use the loan platform business as well, and still make money and revenue off of that, and also give their customers another aspect of the flywheel to enjoy. I expect the demand is not going to be an issue for a while, simply because we're in a falling rate environment. We don't know exactly when rates will be cut. Probably not May. June, I think, is actually maybe a coin flip. I don't know the probabilities say that. I haven't looked at them in a couple of days. But over this year, very few people actually think that there's going to be no rate cuts. And so when rates are cut, then a lot of aspects of that loan platform even get more attractive. And there could be some front running of that right now, because people realize, hey, now is the time to load up. And so maybe demand slackens a little bit. But as far as where else they can scale this, what other types of loans they can offer, I'm going to kick that over to Tanner, because we were talking about this in Robinhood Weekly, which kind of became SoFi Weekly somehow. Well, not Robinhood Weekly anymore. We did away with that name too. But regardless, Tanner, if you recall that conversation, I think that you also had some mention of this in one of your videos too, about other loans that they can have clients with on the loan platform business in the future, the mortgage and the student loan.
Sure, yeah. So, like Anthony Noto said, the loan platform business doesn't need to be something that is done just with personal loans. They can do this with student loans. They can do this with mortgages. They can do this with any other loan that they get their hands on, including expanding the types of loans to be interest only or something like this. One big misconception that Anthony Noto is trying to clear up as well right now is, is personal loans $150 million? Is it
Yes.
$150 million TAM, or is it like a $1.4 trillion TAM, which is the total addressable market for all revolving credit, right? And Anthony Noto would say that it's the latter. So I think that that's really important to focus on. Like, I actually disagree with the fact that there's going to be any sort of slowdown in possible growth rates or anything like this, because you saw what Upstart did during this time. They actually grew. There's a quarter that you can find in Upstart's growth. I think it was in 2021, where they 4x'd quarter over quarter amount of originations.
Different
4x.
environment, but yes, yeah.
Say that again.
It was a very different environment, much lower rates, but your point is still there, nevertheless.
Yeah, I mean, the actual coupon rate charged is higher than what SoFi is doing today, because they're charging them to people that have much lower FICOs. But the only thing that I'm trying to state about that thing is that the cost of acquisition will skyrocket to go after very hot leads that are personal loan first, not SoFi Money or SoFi Invest or something like this. So
somebody said, imagine somebody stumbling on this podcast for the first time. What did I just click on?
No, the worst part was whenever I was looking at the comments, like the Bubbles, Ricky, and I forget all the characters. But I realized
our podcast should be named the Tide Podcast.
But I realized that I was Bubbles in that scenario, which was a hard thing to stomach. But okay, but yeah, I don't know if you guys think that this is going to change the actual stock price of SoFi in the short term, just this deal alone. Curious on your thoughts about that.
I mean, I felt like more than a 3% move was justified, given, it's one of the best aspects. And I expect that 95% of those that are watching know this, but just to reiterate, there is basically no risk to SoFi here. Like, there's none. Like, okay, somebody might say, oh, well, they'll be capital constrained. No, they won't, because it's the capital of these, of the fortresses of the world that's coming into play, not SoFi's. Or somebody might argue and say, well, what if there's a recession and default rates go up? Well, that's not great for SoFi. And they do have some loans, and those vintages won't perform quite as well as expected, although I think they'll be pretty good just because they're very, very high FICO scores. But here, they hold the loan. They don't even go to the balance sheet. They basically authorize it and then send it over. And so that can be the same day, that can be later that day, that can be a couple days. It's no more than a week before they kick it over. So, where's the risk? Where's the downside? Like, there really, really isn't any. It's free money from a product that didn't exist a year ago, that's accelerating very rapidly, that is dropping EPS to the bottom line. And in the previous fireside chat, I believe it was Chris Lapointe noted that the margins for this about 50%, but they continue to improve as volumes scale. So we don't have to worry about, we don't know for sure that 4.25% is going to be the take rate for all of these. It may not be for some of these, but I mean, they're just printing money with this. And the stock price is just sitting there. And so I had not bought any SoFi, I don't think, this entire year. So once I hit my 10%, I don't do that. Well, I'm under 10%. I saw this news. I'm like, I'm buying. I'm up 10% now. So
yeah. Tevis, does this change your opinion on the stock? Are you going to buy any? What's going on? Open up your heart and let the viewers in.
I already own a unhealthy amount of SoFi stock, but maybe I don't rule it out. I agree. The news was what I called it was the most bullish SoFi news we've gotten in 2025. But I don't think it was the biggest news ever. It's interesting because it validates a lot of what Anthony Noto has been saying. It's their words put into practice, whereby they're saying that we are not ruling out pushing everything through the loan platform business and having that be our entire business model. And that would eliminate a bear case immediately, where if you remember, I think it was like 2 years ago, Chris Patel's bear case was like, oh, delinquencies. And that's many people's bear cases. And all of a
It's not
sudden,
even I think bear case is like downplaying how important it is. Like SoFi's price to book is like 2 times. But what if they do get everything over to the loan platform business? Like what's stopping it from going to 6 times or something like that?
nothing, absolutely nothing is stopping. I'm just saying, like, I'm making the risk point that they're not taking on any risk. It's basically a finder's fee, essentially, for finding and putting together these deals. And that's a great business model if they can do it. If they can leverage their brand, they can leverage their bank charter, they can leverage their vertical integration that they have, and they can just become a user acquisition machine for all of these third parties. That's great. Like, absolutely do it. They're making more than enough money through that 4% take rate, to be able to make this a sustainable thing. That clearly the demand is out there. Like, why would you originate on your behalf?
Yeah.
Why take on the risk?
Do you think that okay, so 2 things, cuz I keep going to these extents and then I find people push back on me. Do you think that the loan platform business will ever be offered externally to other companies?
I don't understand.
Collecting the application data from Robinhood, let's say, and then SoFi originates it on their end, and then they are offering Robinhood customers a loan through the marketplace of the loan platform business on SoFi, but it's going through Robinhood's platform.
Sure, maybe, but like, I don't think that you need to really overcomplicate it for right. Like, there is more than enough to go around right now in the initial stages without even needing to make any modifications to how it's being done right now.
Well, one of the great things about the way that this is set up is that I wouldn't imagine that it requires extensive modification in the existing structure, and it's not going to disrupt what they're doing right now to make some changes. And I felt like I'm really curious what that platform is that Edge Focus noted, but it feels like that's a halfway step to the reality of what Tanner had pitched there. It seems like it's very likely, it's inevitable. So we have other types of loans that they'll be doing, probably other partners that have their own platform, but they want SoFi involved as well, just because they know that they do a very, very good job with their data and with underwriting. And beyond just, I think, SoFi client base at some point, that'll be the reality too. So there's a lot of TAM here, and it's a time where there's a lot of tailwinds. And this is a product that it's not going to take, 18 months to 24 months for the deals in the pipeline no, they're slamming the table. The phone is ringing off the hook and they're answering and they're saying, okay, sure. Another couple billion. Why not?
Yeah. I also think, I mean, I don't try to overcomplicate things, but I also do want to see like what is the bullish case. And I really do think that we're going to see a day where Galileo clients are offered a lending product that is underwritten by SoFi.
Yeah, but I also think this is also where we stumble. It's because we have a 1-hour debate on this stuff, and then we do that same 1-hour debate on a weekly basis, and we cannot help but extrapolate out. And some things pan out and some things don't pan out, right? Like, if you said, hey, it's great that they have Galileo because it allows them vertical integration and just to offer their own services for the B2C side of the business for cheaper, that would have been fine. But immediately we jumped to this, like, AWS of fintech, they're going to power all the bank, like this 10-year out bull case. And all of a sudden now, a couple years later, we're sort of disappointed with the progress we feel has been made. And so I think with a loan platform business, I'm just taking it one step at a time and letting the results speak for themselves with regards to their growth rate before getting overly excited about the potential for this thing. Because by and large, I mean, we don't necessarily know internally. We're not in the rooms when those decisions are made, what their strategic vision is, where they want to allocate resources, so on and so forth, right? Like, we hear it secondhand from, a podcast or a fireside chat or something like that.
If you could throw this up, Tanner.
I see what you're saying, but it's like, does that have to do with what Tevis just said, by the way? What you're about to pull up?
Yes.
Okay. Because I want to address that as
Analysts are
well.
doing the same thing. It's early, holiday weekend, so maybe some are just out on a yacht or something. But well, of course, this is actually not the best platform for it because there's not that many analysts that do cover SoFi, but there's more than that. So, but their projections as far as revenue, as far as EPS, they're just wrong. They are, and I don't think it's necessarily willfully wrong. They're just not paying attention for some reason. And I think as SoFi doesn't just post the typical SoFi surprise of beat and raise, but they continue to blow it out of the water, people will have to look and say, okay, why are we getting SoFi so wrong so consistently? Oh, yeah, the loan platform exists and it is incredible for them and their bottom line.
Yeah, I want to address what you said about I think it is okay for what you're saying. I don't necessarily disagree with you that don't try to blow things out of proportion and be a little bit conservative about your projections. But I also think if you were to have done that with Tesla or Nvidia at the time, these companies you wouldn't have been able to see them before they've expanded because you would have just been looking at it as a car company that has sold, 20,000 units at the time or something like this, right? It's I think blowing it up to its maximum value is how at least I think you guys know this. I'm a total addressable market investor, meaning how big can these companies get, right? What is the problem that they're trying to solve? How big is that problem? So that's kind of all I do. and you don't want me to do that. So, no, I do want to see SoFi at its largest potential and then maybe be comfortable if it doesn't get fully the way there.
All I'm saying is that with this company, it's undervalued enough relative to where it should be trading by any type of traditional valuation metric.
That's not true.
It is.
Price to earnings, book ratio.
Yeah, but when you consider its growth, right? When you consider the growth rate of the business, it's fairly cheap relative to the prospects that it has. And I don't think we need to be sort of grasping at straws on the multi-year vision to make the argument that this business is cheap. I think you can say, okay, loan platform business is absolutely the most exciting part of SoFi in 2025. It's, I think, the thing that has the most tangible potential results for SoFi in 2025 and beyond, right? It's going to do volume for the business in a real way. If they have, I don't know, 100 million per quarter dropping, then that didn't exist last year. Then you're like, holy crap, that's a real mover, right? And I mean, the thing that I said in my video was it validates what management has been trying to tell us, because while we've been focused on the brokerage and the B2C side and all of this other stuff, they're saying, and I know it's not an excuse for oh my gosh, you have multiple teams that can work on things simultaneously, but what management said in that fireside, last month or 2 months ago, whenever it was, is they said, look, we're focusing on the avenues that we believe can make us the majority of the money. We're focusing on avenues that we believe we have a competitive advantage in. And that's fine, right? I don't think we need to, I mean, for the sake of conversation, it's totally fine to do, but I don't think we need to make an argument for loan platform business 3 years out or 5 years out to just realize holy crap, this did not exist last year. And all of a sudden, magically, we have hundreds of millions of dollars
3 quarters ago. Yeah.
Right?
Didn't exist.
I'm really excited to see. I mean, I just wish management didn't guide so conservative, because I want to see what the real numbers are for me to be able to sink my teeth into, how aggressively they want to expand it. Because from what I'm seeing from the press releases, it is very aggressive. It's every 2 or 3 months, we're seeing another big loan platform deal announcement drop. We saw it in October. I think did we see one after October as well, or was October the last one?
No, we saw one in March. Blue Owl was March.
Blue Owl was in March. October, and then before October, you had like September for what was it, PGIM or
No, that Blue Fortress was the first. Was
No,
the first
you had
loan platform business deal, but before that, we had other large deals for securitizations and stuff.
You had SCLP. SCLP was the 697 million one, and then you had PGIM in Q4, which was the expansion because they had PGIM in Q1 of 2024.
That's not loan platform business. Those are just securitizations of SoFi's loans on their platform.
Sure. Okay. But the point is like we're getting a high frequency of these deals dropping, and I expect the frequency to continue. And I just would like management to say, hey, look, this is what we see. Like, what is the feasible top? And the interesting thing, Tanner, is that in the last earnings call, the majority of analyst questions were around loan platform business, and I expect that to be no different this time around.
Yeah, I'm super freaking excited. There was one piece of news that came out. I don't remember when. Was it March? The $700 million thing where they securitized their loan platforms deals. Do you remember that, Roy?
Vaguely. That feels like forever ago. Like there's been so much happening in the markets each week. It feels like 2 or 3 weeks goes by each week. So
yeah, it's crazy. It's crazy. Even doing the weekly shows and then you're going through all the stuff that's happened on these companies. Yeah, March 3rd, SoFi closes $700 million securitization of loan platform business volume. So they ended up selling loans that they originated for others and then sold them on behalf of others. So they've acquired loans and then sold them and never actually put their own hands on them. Yeah. You're probably taking a fee both directions.
None of us disagree how bullish this is. Tevis is like, hey, let's play it out. And there is a chance that this is just a grab it while the grabbing is good before rates fall. And then when rates fall a little bit less, I don't think that'll be the case, but we'll see. I'm curious. So this has changed my answer to the question of whether or not SoFi will just stand pat with guidance, which would be abnormal, or if they'll do the typical raise. Previously, given the macro conditions, I was like, it wouldn't shock me just because there's a lot of uncertainty. And they're not the most impacted by tariffs at all, but that does cause some ripple effects, some second and third order effects. So I was like, they might just stand pat. Now I think that they're going to raise simply because like this shows that their product, that people want it, they want more of it. They'll be able to meet that demand, and clearly their business is accelerating. So even if there's still no resolution on all the tariff question stuff, what do you guys think? Are they raising, or are they?
They always raise. They have to raise. They're going to raise.
It would be pretty bearish if they didn't.
I hope, honestly, I think that the company would do better if they didn't give guidance. So if they take it take this as an opportunity to say, hey, we can't see the future. We're going to back out for this next quarter and then just continue on going forward. I think because a lot of the market will do that they will be excused, that it'll be fine to do that. And it'll actually allow the market to guide based on growth rather than based on what management has said, which has been false.
Yeah, hard to disagree on that one. I feel like a lot of stocks can get away with not doing guidance and blaming it on the macro. I feel like SoFi is one of the few stocks that will get killed if they do that, because analysts have always discounted the growth of this company, and it's traded very aggressively on guidance in the past. And so I don't have faith that the market is going to give them a pass on that one.
You would have to see, the only place, I think you're right, Tevis, unless, and I don't think we'll see this right now, but like if all the Mag 7 and a lot of major companies, like it's just, 85% of the companies are saying we're not doing guidance, then it would be the expectation. SoFi goes a little bit later. But if it's like 1 in 3 companies are not doing guidance and SoFi joins that 1 in 3, there's going to be a lot of bears that have a lot of assumptions about what that means. And it won't be accurate, but I mean, they'll say, oh yeah, all these things are falling apart in SoFi. There's all these issues. They're going to 0 or 3.
Now, I mean, I'll take the other side of that same argument to say that, like, if 3 out of every 4 companies are foregoing guidance for the next quarter as a result of macro. I don't think it's going to be nearly that high, by the way. I think it's going to be less than 1/3. But let's just say if half of the companies are foregoing guidance and SoFi comes out and they raise guidance, like I think that's going to have an even bigger impact than their normal beat and raises, because people will be considering the macro into effect. I mean, I don't know. That's like the glass half full kind of view.
Do we want to take a look at some other SoFi news really quick?
Yes.
Vadim posted this on Reddit. If you guys didn't know who Sniper Shot was on Reddit, it's Vadim. SoFi to launch SmartStart student loan refinancing. In this type of repayment option, SoFi allows students to pay interest-only payments for the first 9 months of the loan for 7, 10, 15, and 20-year terms only. This is limited to only 9 months without the ability to extend or shorten the period. SmartStart can only be used once, even if refinanced again afterwards. Not all borrowers qualify for this. I mean, Noto said this was coming. He said that this was coming. I think that this is the early start to the interest only, and another extremely flexible option that he can add to differentiate themselves from other players. What did you guys think about this?
It's good. I mean, I really hope that the interest only loans don't catch on just from a macro standpoint, and like knowing what that can benefit somebody like over the short term, like over a year while they get things together. But
yeah,
man, if we go that route as society, like it's the writing's on the wall at that point. Buy now, pay later is enough of a risk. So,
I mean, people are breaking out their burrito payments in 4 increments, bro. I think the writing's been on the wall for a while now.
Yeah, well, the buy now, pay later, it gives me concerns, but this is like next level when it's just interest only. That's it. At least with buy now, pay later, you can argue and say, well, it should be in the same credit box as credit cards. Maybe it's even better because a lot of those pay in full or no interest. But
yeah, or lack of hidden fees, these types of things. People understand it.
Yeah. Interest only is just, you will never pay it off. And if, depending on the terms and how that's rolled out, and we see like this is not like a permanent for the rest of your life type thing. But if that's the trajectory people are going and companies are going, that's really bad for society. So
I think from SoFi's perspective, it's kind of weak doing it on the student loan side. So it makes me think that this is just a dry run, because where the real money or the real value prop to do this is the personal loan side, because that's where the interest is like 20%. On the student loan side, it's not going to be as aggressive. And so if you're going to do interest only, the real mover is doing it on personal loans. They might be testing it out on student loans and seeing how that runs for a couple of months, and then eventually moving to personal loans. But like personal loans is where they're going to make the money with interest only, because people are going to go to SoFi as opposed to any other institution just to extend that term out, essentially, right? And I think that was in Anthony Noto's fireside. That was the entire purpose. Like they're thinking about it in the context of personal loans, in the context of high interest payment burdens, right?
Yeah, to replace credit card for the people that were just putting minimum balance on credit cards every time, which is essentially saying, hey, you know what? Why don't we recreate that for you and offer you a smaller interest? So instead of 29%, you pay 13%. Pretty good. But yeah, student loans, more products there. Hopefully see that in the loan platform side too. That'll be really interesting. But yeah, there was other news that I wanted to cover.
The interview, for sure.
Yes, perfect. That's a great one. What did you guys think about the Anthony Noto, Liz Thomas interview?
Liz Thomas? Liz Young?
Now Liz Thomas.
Oh.
Yeah.
Married?
Yeah, I deliberately... I was like, oh, wait, is it Young or Thomas? Like, okay, which one is it now? I thought it was Young. So I ended up just saying Liz. And like, Liz and Noto had a good interview, because I'm like, I think that she got married, but I'm not. Yeah.
Careful not to say Liz Noto.
Yes.
That's a whole different message you're sending out.
I really thought the podcast was excellent. If somebody had never heard anything by Anthony Noto at all. Like, it's well worth a watch. A lot of it, especially like the first half of it or so, were topics that largely have been touched on. There were some interesting things on leadership as well. I thought it was very interesting, in particular, what he said about the state of fintech and those current leaders, where they're going in the future, including naming a certain leader. And then maybe we'll talk a little bit about that. And also his comments on crypto were pretty exciting too. So, and also maybe we'll touch on this too. Like I can't remember how it was worded exactly, but if you had infinite resources and no regulation, what would you do? That was pretty interesting too. So, what do you guys think?
Yeah, I mean, really enjoyed it. Ambitious. However, I wish he added more clarity on certain things, but still, we asked him to talk more online, and that's what we ended up getting. It didn't have to be with us. It didn't have to be, I just wanted to hear more from Anthony Noto. So if he wants to keep that in-house, I think that's a good first start, and hopefully he continues to do more of these where he answers some more investor questions, because there were some definite questions where he was talking to probably the audience of the SoFi Weekly, let's be honest, or whatever weekly this is. The one-stop shop podcast. Tevis, what did you think? What did you think about the top 10 financial institution, top 15 tech company?
I'll be honest with you guys. I only saw small clips of the interview. I only had it's on my list. It's on my list. I had time this morning and I made a video instead. So, but the clips I did see, I saw the winner take most in brokerage would be a Robinhood, winner take most in buy now pay later would be a firm, and that they're going for the they're going for their space. I like that. Like I mentioned in my video earlier today, it's like that Peter Thiel quote around like, hey, let's not compete in markets where we don't it's a perfect competition. Let's carve out where we have monopolies or where we have at the very least the competitive advantage, and let's double down and triple down on that specifically. I did see the clip around the top 15. I don't even know why we're wearing white shirts. Me and Roy were wearing it, and then Tanner joined in. Yeah, I think top for all those statements, because he's made those statements in the past in different forms. It doesn't account for a time frame. He's not saying top 15 by next year or by 2030 or by 2035. Like, sure, I guess, if you keep executing and you keep growing, then yeah, why not? You can be, I guess. But if you're saying top 10 financial institution, I feel like that's more feasible than a top 15 tech company, because there's some tech companies out there, especially with the advent of AI, they're going to smoke you in the dust from a market cap perspective. I'm just saying.
Plus, depending on how you're defining tech company, like if you're throwing out Visa, MasterCard, American Express, which are financial institutions, it's a weird comparison, because SoFi is a tech company in the sense that those are, and JP Morgan Chase, but not like a traditional tech company, usually in that basket. So yeah, I found it laughable is wrong. Like it's theoretically possible. It's got a small chance. But the top 10 financial institution, that can definitely happen.
Yeah.
And the market caps are a little different for each of those. Not as much as you might think. Although, so Tevis, funny enough, last night in the Robinhood Weekly that became SoFi Weekly, although we don't use those names anymore, apparently, ended up that Tanner had this list of American tech companies, the top 15. Do you know what company he excluded from that list? I bet you can guess it if you think hard enough.
It's one that shouldn't be on the list.
It's one that absolutely should.
Oh, Palantir.
There you go. You got it. You knew it. Good job.
There's like a big company now. They're like 200 billion or something.
Yeah, they're massive.
I don't think they're that right now. Are they under 200 right now?
They're right around there.
Yeah.
Palantir is.
I guess they rebounded pretty quick.
220 billion market cap.
Yeah.
Oh wow.
Yeah. So like, again, I think the top whatever tech company, like that's going to be a real stretch. because you break out of your vertical, right? But if you stay within the pocket of your vertical and you say, hey, top 10 financial institution by market cap, like even that is going to take a long time and a lot of baked in execution risk and a lot of maybe some missteps from some other big players. Like Wells Fargo needs to continue to make some bad decisions. And yeah, maybe you can get there. Like it's believable. But honestly, man, like I think from an investor perspective, I don't think investors really care if you're going to get very, very, very well compensated if you hit top 10 financial institution and not top 15 tech company. Like at the end of the day, it's like a 20x or something. So who really cares?
Yeah.
You're going to be rich. If either statement is true, you're going to be rich.
Right.
Maybe not you personally, but like I will be.
you will be. You already are. But let's sorry. That caught me off. Yeah, I mean, it's weird to think about, right? If I were to have said Vlad Tenev came out there and said those comments, would people even bat an eye?
No.
If David Velez came out and said those comments, would people bat an eye?
A little bit, just because
the answer's also no.
Yeah. Well, they're not as familiar with Nubank and David Velez, so or David.
That's fair. In terms of recognition, it's definitely, less. But I find that it's easier whenever you're a really large story stock that people can picture your multiple much higher. And SoFi was definitely, whenever they SPAC'd onto the market, a big story stock. They're moving very quickly. And now, since they've become a bank, that has slowed down. Some people, the skeptics, say that it is, them becoming a larger, more mature company, slowing down innovation. It's the bank charter slowing them down. Other people, like Noto, says that obviously they're working on all these things, but they're iterating on those things on the back end to whenever they put them out that they'll be a little bit more perfect. Different styles for different people, I guess. Tevis, you've made quite some extensive videos about that, actually.
About what? I wasn't listening at all.
Just the style of product production, like the way that Robinhood puts out products versus SoFi. Which one might be?
Well, I mean, I see them more as a product company. Like, I gotta be careful.
Did you see Noto's comments about that? How he was talking about,
and like everybody and their mother can call themselves a product company, but I care about, what is their presentation around their new products? What is their thinking through the edge cases? What is their consideration for the user experience? Like all of these, like what is their approach to iterative, releases? What is their approach to testing? So on and so forth. Like every large company makes products and as a result is de facto a product company, but I don't think like every company is truly a product company, if that makes sense.
Yeah, definitely.
And so like, yeah, you're going to call yourself a product company because what else are you going to call yourself? Or a marketing company? Like your stock is going to fall, you're going to get cut in half overnight. So, but what I'm seeing from, and again, this is just from one person seeing it from outside in. What I'm seeing from Robinhood is a real care, attentiveness around their product releases, is consideration for the feedback of their users, is the presentation value of their features, the entire sort of white glove service end to end around how they present these products, how they package the products, how they price the products, how they can speak to the value proposition of these products, how it's going to affect their user base, how it's going to play into their ecosystem. And so that's what I deem as a product company, is that going above and beyond standard of their product releases. It shows through that they truly care about their products. And so I don't know. Like I haven't ever seen a product presentation from SoFi. That's not their style. They'll just drop things and I'll read about it in a PR, or I'll hear about it in a fireside chat, or I'll hear about it on earnings. And those are pretty much the three avenues where I've ever heard about any product announcements from SoFi. Whereas like Robinhood will have full presentations. They'll demo it live. You know, it's a different look and feel. It's a different vibe from a consumer perspective is what I'm saying. But
do you think that Anthony Noto will have changed his vibe? Like this recent podcast that came out, is this in response to people saying that he needs to talk more, or was this already a pre-scheduled idea?
I mean, look, I don't think Anthony Noto is the type of person to really be swayed. I'm sure he cares. I do not doubt that he cares. The comments around like, I'm listening to every piece of feedback, I read every piece of feedback. Like, he obviously wants the business to be successful. He obviously is taking it personally. He's obviously competitive. I'm not doubting that at all. I'm just saying that they have different styles when they're approaching the actual releases. And I don't think that he's going to be somebody to get some mild criticism from 3 freaking dudes on a podcast or a couple of people making mean tweets at him, and all of a sudden it's going to cause him to change his strategy, change his approach. Like, I would imagine he's more methodical than that. So like, if you have a company where a couple of mean tweets on Twitter on one day or another can cause you to immediately react and do some type of podcast or press release or something in response to that, then like, that's not you truly maintaining your, like, I understand you should be adaptable and you should care, but at the same time, it's too reactive in my mind for you to be leading, you know, a multi-billion-dollar business. And so I'm giving him the benefit of the doubt and saying like, no, there's nothing that we can say or do on this podcast to change his strategy. He's going to keep executing on what he believes is right, on what the path that they've set upon. And so that is a fundamental difference between, I guess, how Vlad would run his company versus how Noto would run his company versus how David Velez would run his company versus how whatever other CEO has their own flair in terms of their releases.
To be fair, I don't think that, I mean, just us. I actually think SoFi has like one of the largest investor followings, if not potentially the largest for the market cap size. I can't think of any that are any larger. And you can even see that if you go on any like Seeking Alpha or Tip Ranks, where it shows how many people are following individual tickers for their news. Like, SoFi has more people following SoFi news on Tip Ranks than it does than Shopify does. And Shopify is Canada's largest company.
I mean, yeah, I would like to think that the retail investment community has something to do with that. Like,
the reason why I'm saying is I hope that they're listening to that audience, not the 3 of us. Like, I don't mean the 3 of us. I mean like the collective thousands.
I mean, I would maybe this is just my own ego, but like, I would like to believe that the 3 of us have had a small part in building that SoFi community. To like, if we were making a podcast around, I don't know, Shift 4, maybe we would have not had, and we could have been doing it for 3 years, but and the stock is just not exciting, let's just say, to the vast majority of people, and it wouldn't have caught on. But if we're making a podcast around, like, I don't know, hymns, let's say, something that is exciting, that has potential, that it has high growth, and we are doing that for 3 years consistently, week in, week out, and all of our pieces of content is around that, like, yeah, you will build more of a following around those names. Now, there is like, it's a mix of what people talk about versus how exciting is the company fundamentally. Like Shopify, I'm sure they're doing great things. I don't know anything about what they're doing internally for me to get really amped up about them. And I don't really see anybody talking about them anyway. So like, I think you're the best example of this, right? Like, it takes one person to start talking about stuff. You started talking about new, and now I'm seeing more creators talk about new. But like, it's a domino effect is what I'm saying, right? Because
no,
we ran, yeah.
I talked about the company at $3 and now it's like 11. That's what happened.
Sure, but like, I wouldn't discount completely. You have like 20 something thousand people following you. You know, like, it's something. How many views did that podcast get that Noto was on this week?
From them or from the people that reposted it?
Exactly my point.
From them, I think it was like 300 or 400 views.
Exactly my point.
But I think Couch Investor just took it and reposted, and I think it's got like 20,000.
So there you go.
But I don't know. If Tanner and I started that Shopify pod, hey, Kelly, I'm still down. Shopify Weekly. It's needed. It's needed. A large Shopify investor, not in terms of the market cap, but in terms of my portfolio, and an avid merchant would be such an amazing show.
Yeah, and 2 Canadians, 2 merchants, 2 Shopify investors. I'd watch that.
Yeah, me too.
But Kelly doesn't want to. So.
Yeah, shouldn't call it Shopify Weekly though. Yeah,
Speaking of, are we gonna spend some time talking about our name or what?
Yeah, I like 3 dudes, 1 stock. I heard someone say that. I thought that was funny.
I don't like that.
I think that one works. Cole said 2 girls shopping podcast. I would do that for the Shopify. I'm fine with it. I just want to talk stock, you know? And it did hurt my feelings hearing you say, I don't know what Shopify's up to. They're potentially the greatest growth story of all time.
Well, there you go. That's your next video caption.
They really are, though. I mean, that's a 100-year company.
Yeah, and Toby's a great CEO too. So, yeah, I don't know. I like the name of my podcast. Did you guys see that?
Yeah, yes. Stock opinions for investors or something like that.
Yeah.
Abbreviated as SoFi. I just don't like stock opinions for investors. It sounds too like it's not catchy to me. But I do get but the abbreviation could work if it was like 4 words that I like.
How many of the 4 words do you like? Is it like 3, 2?
I like one of them, stock.
I guess 4 could work somewhere in there. I kind of like stock for friends.
Opinions is just too light. Like it's too non-biased. I like a biased show.
Financial advice for no.
Yeah.
I think
Actually, we'll just call it "This is financial advice," and we'll start off and say, "Hey, none of this is financial advice." Don't know who came up with that title, but
it needs to have weekly in there, right? Or does it not?
It doesn't need to. No.
Occasionally.
Yeah. Yeah, that's the problem with doing something like FinTech Fridays. Is like we move it around too much. We got to put it like.
Yeah, Joby with friends. Ben says.
Yeah, it doesn't have to be weekly. It could be occasionally. Joby with friends is a little too on the nose. Stock studs.
Yeah, I feel like so.
Three stock studs.
Here's I think the acceptance criteria in my mind. Number 1 is it should be broad enough where it allows us to talk about other stuff. Number 2 is it should be open enough where if somebody's never seen this show before, they're not like, what the hell did I just walk into? Like this episode, of course. And it should be catchy.
Yeah. I always, if you guys follow any of my things, they're usually the first and last, or the 2 words have the same starting thing, like what Stan Lee did. Sorry, say that again.
It's an alliteration.
Yeah. So FinTech Frenzy or Market Madness. If you actually go through and look at all my names, they all are.
I kind of like Ticker Talk.
Ticker Talk?
Somebody mentioned it.
Weekly?
Social finance.
If SoFi stock stays down, we'll make it weekly.
Yes.
But
yeah, lights out podcast.
So while we're thinking of names, if you guys think of them, be sure to send that to us, tag it to us, comment down here if you're watching it later. I also wanted to share this very quickly. I know we're close to that hour mark. You put it up just very briefly. Noto made some remarks in that interview with Liz, and
Do you
ended
like
up
this
that,
one, Roy?
what's that?
Do you like this one?
Yeah, I mean, that's pretty good.
It's
And we
accurate.
know who the rich dude is, and it's not myself or you; it's the middle guy. Uh,
Guys, don't do this.
so with crypto, Noto made some remarks, and it seems like it's probably sooner rather than later when they'll relaunch it. And then with Gertrude Yada noticed with this update on the 18th, they included this right here, that there is a image there for the crypto platform for invest. Like, does that mean that it's coming back instantly? No, but I think that's yet another indicator. In addition to Notice comments that sooner rather than later. I don't think now it's probably not going to be a next year thing. I was completely right that it wasn't going to be first quarter, but I was thinking maybe quarter 4. It feels more likely it's going to be a quarter 2, quarter 3 thing. So it's exciting times.
Yeah. There's a lot of crypto stuff. People are going through the app code and finding lots of crypto information.
It's almost like that they're getting ready to launch it whenever they have approval.
No, this would be the name if Tevis just did like a solo live stream.
Yes.
Degenerates.
Yeah, just the degenerate. And then you talk about your sports gambling and then your TSLL leaps. Mine would be the tech frenzy. Drop the fin.
Just
Fin is occasional. All right, so what are we doing?
whatever you want.
Spotlight on financial innovation. Yeah, it might have to just be something like FinTech Fridays or something like this.
The best name I've seen so far thrown around was Ticker Talk. It's catchy. It's
But isn't that a thing?
Ticker Talk?
Yeah. I feel like I've heard that before. Because it is a good one. I like Ticker
Heard
Talk.
it in your subconscious because that's what the name should be.
Yeah, we could hit the nail right on the head. The unofficial SoFi show. The not SoFi Weekly.
It does look like there's the Ticker Talk. Their most recently discussed ticker is PayPal. And Palantir before that, and Tesla, and SoFi. Who are these people? Look at this.
It's just going to be like 3 guys that look slightly like us.
Here, I'm looking it up.
Parallel universe.
You can share the screen if you don't mind. So the Ticker Talk. So it has the in it. So maybe we'd be fine without it. But yeah, like literally PayPal, Tesla, Palantir, SoFi. Now they do have Kava there, and who knows what else that I'm not going to go.
Other great names, though.
Yeah, it's crazy.
Yeah.
Who are these guys?
Yeah, the only weird thing about doing something like TikTok. The only weird thing about doing something like Ticker Talk is like you come on, you're like, can't wait to see what they talk about. Oh, SoFi. The next week, oh, they're talking about SoFi. Then the new viewers who come on, they'll be like, Ticker Talk, you guys should call yourselves the SoFi Weekly. All you talk about is that company. Yeah.
And all I'll say at that point is like, yes, we should call ourselves that.
Should call ourselves the Compound and Friends. It's a catchy name.
Yeah, I think Stock Talk is taken, but that's a good name too.
Somebody put Vlad's best friends weekly.
Are you on the Vlad train? Do you own shares of Robinhood?
We've been through this. I own shares of Robinhood. I wouldn't say I'm on the Vlad. Like,
you're on his payroll? He's paying you?
I'm not on his payroll. I am definitely not Vlad's best friend. Robinhood has never reached out to me. I do own the stock though now.
It's a joke, by the way, guys. In fact, we actually have to put it in our disclaimers now that these companies do not pay us.
Friday Finance Friends.
Yeah, there you go.
Sounds kind of cheesy, but
Yeah, it'll be something like that. Well, wait until next week to see what we do. Until then, thank you guys all so much for watching. I really do appreciate it. If you guys want to see even more content from the two best friends and the rich dude, we have what are we calling the after hours now? Oh my gosh. We have a stock after hours, previously known as the SoFi Weekly After Hours, that is member only. You got to hit subscribe, hit the join button down below. Until then, thank you all so much for watching. Really do appreciate your time. Bye for now.